Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to get into everything you need to know on AMC stock here on the day today. The stock is pretty much flat. IWM, other Russell 2000 names, actually down a little bit on the day today. Whereas even if you're looking at something like the NASDAQ, which is actually positive today. So you're getting a little bit of a give back with some of your small cap stocks. AMC stock, relatively speaking, is outperforming today. So that is a great sign. We have a lot to get into, though. The Fed is kind of pushing back some of their statements. Let's see if this is affecting the Fed futures. We also seeing some interesting things happening in the world of treasuries. So lots of different things to get into here in this video. Hit that like button and subscribe to the channel. So again, AMC stock is now flat on the day. IWM is down 0.32%. Nothing really specific to get into with AMC as far as news is related. There's really no news coming out, but just good news for the economy across the board. Treasury Secretary Yellen outlines plans to improve U.S.-China ties. That's great news without getting into it too much. Anything that really has to do with improving relations with China is going to be seen as good for our markets. Olive Garden owner Darden beats earnings estimates and hikes guidance as sales climb. I mean, if you're in the camp of looking for a recession next year, it's really not looking all too likely if Olive Garden is saying that people are going out to restaurants, right? That's a very, very good sign. Now, one of the things that could be affecting your small caps today is this. It says, Fed's John Williams says the central bank isn't really talking about rate cuts right now. This is obvious, okay? The way that it's put sounds like, we're not going to get rate cuts. It's a pushback on that. Right now, the first rate cut is expected in March. Of course, they're not talking about rate cuts in December. They're not, okay? That's common sense. It's kind of which way are you referencing this, right? Or preferencing this? Are they talking about rate cuts? Absolutely not. Do they know rate cuts are priced in for March? Absolutely, right? Once you actually get to the March meeting is when they're going to talk about rate cuts. He says, we aren't really talking about rate cuts right now, he said on CNBC's Squawk Box. We're very focused on the question in front of us, which, as Chair Powell said, is, have we gotten monetary policy to sufficiently restrictive stance in order to ensure that inflation comes back down to 2%? That's the question in front of us. And that's obvious, right? This is just obvious for anyone that is a seasoned investor like myself. I mean, it's, well, what did you expect, right? One thing, one foot in front of the next. He says, quote, I just think it's just premature to be thinking about that, Williams said, when asked about futures pricing for a rate cut in March. Williams said the Fed will remain data dependent. If the trend of easing inflation were to reverse, it's ready to tighten policy again. It is looking like we are at or near that in terms of sufficiently restrictive, but things can change, Williams said. One thing we've learned even over the past year is that the data can move, and in surprising ways. We need to be ready to move to tighten the policy further if the progress of inflation were to stall or reverse. It's not going to, right? This is obviously what the Fed has to say to keep inflation expectations down, to make sure businesses do not start raising prices. But that's not going to happen, okay? We're seeing some massive deflation out there. Costco just reported that they're seeing 0% inflation. Walmart has told us they're going to see deflation. Same thing with Target and many other retailers, Dollar General even. Inflation's not going to be a concern heading into 2024, at least in my personal opinion. Now, what you're seeing on the day today is some concentration of capital going into the NASDAQ, your Magnificent Seven. Think about it like this. If you had to be invested in our markets during, 2024, who knows what can happen? If you go into a recession, that's why Magnificent Seven stocks have been doing well. or had been doing well in 2023, because that's where you would want to be. They're really not interest rate sensitive. They're not too economically sensitive. Those stocks should outperform, or at least do better than, the average interest rate sensitive name. Your Russell 2000 is really your risk on kind of name, right? Or sector. And that is, in alignment with AMC as well. AMC would be a more risk on name. And as capital does come back into our markets, that's exactly what I expect to happen. I expect AMC stock will start to do pretty dang well. Now, 10-year treasuries down about 2 basis points today, down to 3.91%. But it's not big enough to actually cause, a big day for the Russell 2000 in and of itself. So these are important things to keep in mind. Now, we do have a new AI investor sentiment survey that is out. You are now at the most bullish level you have been at in the past year, at 51.3% bulls, 29.4% neutral, and 19.3% to the bearish side. So you're getting almost, so bullish now that you want to be a little bit careful on any downside moves. And obviously, as I'm bullish for the next couple of months, that does not mean tomorrow or Monday or next week or the week after that are just going to be super strong. I think the trend over the next 3 to 6 months will be very strong and likely give you some sweet gains. But on a week by week, day by day basis, anything can happen. So a slight pullback, sure. No problem. Could definitely happen. Now, let's take a look at some of the Stonko tracker data for AMC stock. It looks like a lot of contracts are going to expire out of the money for today on both sides here. Calls, you got about 6,800 calls currently in the money, 214,000 calls out the money. In the money puts at 25,000, out the money puts at 80,000. So another week of a lot of people getting burned on those options. Next week is actually going to be a pretty decent week as well, pretty good week. You do have about 2,000 calls currently in the money, 46,000 calls out the money for next week. In the money puts at about 15,000, out the money puts at 20,000. So a lot of activity on both sides. Most notably is, the call side, right? Out the money calls about double as high as out the money puts. So definitely quite a bit of activity right there. Now let's take a look at the Ortex data. Let's see what's going on with AMC stock today. First up, let's look at the option activity. Already seeing a pretty strong start. A lot of these options, as I'm noticing, are for next week, December 22nd. 650 call, another 650 call, and another 650 call. These are worth 87,000. 74,000 and 13,000 a piece. So that's all expiring next week. Now, you do have a January 19, 2024 $8 call as well for $113,000. All in all, you have seen 5 orders so far on the day worth about $300,000 with a positive order value of 100%. So a decent amount of bullish activity you're seeing today. Really no bearish activity that you're seeing so far today. Now, short interest of free float. This is where I really differ from the Ortex data here. I just read these numbers to make sure everyone is in alignment, because I know I say things like AMC's hundreds of percent sold short and I think a rally's coming. I almost have to say these numbers so you know what the real numbers are, right? The legal numbers, maybe I should say. The real numbers, I think, are hundreds of percents sold short, but the numbers that we're seeing here on Ortex, that's the only thing that we can actually quantify and actually look at, right, in text. Now, I don't think these are correct. Come to your own conclusions. If you think these numbers are correct, you probably do not want to be in long trades in AMC. I think that's simple. I think that's a fact, right? You do have 8.52% short interest of free float, $141.28 million worth of short positions currently on AMC stock. You do have 1.03 days to cover, 21.05 million shares that are currently sold short, 9.97 million shares that are currently out on loan, cost to borrow 1.19%, 22.3% utilization, and 49.64 out of 100 for your short score. Cost to borrow average 0.62%, cost to borrow minimum a negative 0.2%, and cost to borrow max at 1.9%. So really nothing exciting to speak of here. But again, I do think the short interest is hundreds of percents sold short. Now, something to be watching for is this, your 10 and 2 year yield curve. It should start to uninvert at some point here in the near future. It's not as of right now. This is great. When you actually uninvert, that's when you could see some pain, right? What we've seen in September through October and into, even the beginning of November, you've seen this steepen. So starting to uninvert. Right now, it's not. You're inverted 45 basis points, but technically, when you get above this black line at 0, that's when you become on watch for a recession. Every recession over the past 40, 50 years since this became an indicator, this has always predicted a recession. So this is telling you at some point we will have a recession. I could actually make the argument the economy could speed up next year because of, just look at the price of gas, right? It was $5 a gallon. Now it's $3 a gallon. That's a lot of savings. Maybe that's $5 to $10 of savings every day for the average person. That's a lot of money that could be spent elsewhere, just as a quick example. Now, we did get some economic data as well that came out this morning. Let's go ahead and refresh this so we have the most up-to-date numbers here. All right, so today, we had S&P Global Composite PMI Flash. That came in better than expected at 51. S&P Global Manufacturing PMI Flash came in at 48.2, a little bit worse than expectations. S&P Global Services PMI Flash came in at 51.3, a little bit better than expectations, but nothing that's really too good or too bad for inflation or for the economy. So there you have that. Let's take a look at TLT. TLT is down 0.12%, which is interesting considering yields are actually falling on the 10-year Treasury. USO basically flat on the day today. The dollar is up 0.5% today. That's not the greatest thing we're seeing today. Gold is down 0.12% as well. If you take a look at the option activity today for AMC stock, you have total call volume of 44,000, total put volume of 17,000. So over a 2-to-1 ratio here, there is a lot more call activity than put activity, that's for sure. AMC stock continues to hang out near the lows. We actually hit a new multi-year low on December 13th. That was at $6.50 per share. The stock's currently at $6.71 per share. So a little bit off of that, but you're still hanging out near the lows. If we pull up some of the other indicators like the RSI and the MACD, they're telling you something, right? The RSI at 39.72 says we're more likely to go higher from here, right? You've kind of based out and you're sitting at multi-year lows. If you can start to get some upside here, the RSI is probably going to stay pretty stagnant, leading to a little bit more upside than you might be used to. Now, your MACD is this yellow line is above the blue line, so that is also good news, but it's just not doing anything as of right now for AMC stock, guys. So that is going to go ahead and do it for this video. That's what you need to know. In the next video, we're going to be going over some things that I don't think you want to miss. We're going to be talking about the MOAS in 2024. Something I noticed on StockTwits, actually, that I think puts it into reference on where we are at with AMC stock. So hit that like button and subscribe to the channel. Let me know what you guys think down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.